Welcome to President 902. All right, Bob, how are you feeling? Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Bill, silence is golden. All right. Brad, good morning. Martin, good morning. Bill. All right, all good. Ted. All right. All right. Let's just make sure that the screen is set up properly. Okay. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Everyone else, thank you very much for joining. Welcome back. Appreciate your time. This is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. If you're new to trading stock or options, I encourage you to visit optionscreening.com, link on your screen, to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decisions. If you need more time to read the disclosures, please pause the screen. All right. Trading psychology is important, right? We're approaching two events that basically a flip of a coin, right? I mean, for every person who thinks that NVIDIA is gonna hit a home run, that there's another person who thinks that it will probably not meet the expectations. So since the market always consists of unknowns, right, that can actually affect the market, plus there's always black swan events which can come unexpected, it's very important to establish a well-defined process, right, and become a disciplined trader. What does it mean to me? To be a disciplined trader, you have to be kind of a mechanical trader, right? Kind of almost like a robot, right? That you always trade the same number of positions, always the same position size, all right? And you can be bullish on the market, you could be bearish on the market. You think market will trade in the range. I mean, all these three possibilities are always possible, but always have the same number of positions. If you don't have a written down trading plan, if you don't keep a journal in writing, I propose to have no more than 4 positions and maximum exposure 2.5% of your account value per position, right? You don't trade the same number of contracts, you don't trade the same number of shares, you don't trade the same number of dollar, right? $200 worth of options, or $2,000 worth of stock. You always look at the maximum risk and look at how much money you're willing to risk per position. Most people don't do that when they start trading, right? Most people just always trade 100 shares, or they always trade $5,000. I think both of these, I mean, dollar amount is better, right? If you always invest on a $10,000 account, you can basically say, listen, I'm not going to risk more than 10% of position. I'm going to invest $2,000, right? I'm going to invest $2,000 always, and my stop loss is always 10%. I mean, I think that's a little bit better, right? Most of the time, if it's the same beta, you're okay, But if you trade in Bitcoin, which could be very volatile, or you trade in Peloton before the earnings, right? And Peloton sells off 30%, or Foot Locker sells off 30%. Well, that's not, then you have different exposure, right? $2,000 worth of Foot Locker before the earnings versus $2,000 of ADI semiconductor. They move differently, right? ADI will not, usually doesn't move more than 7%. But Foot Locker moves 30%, Peloton moves 30%, right? Macy's moves 30%. So then $2,000 is not the right approach, right? You have to adjust for beta. If you don't trade volatile stocks and it's the same beta, then I guess, yes, then you can always say, okay, on the $10,000 account, I'm not going to invest more than $2,000. 10% stop loss, or 50-day moving average, or 200-day moving average is my stop loss. And, so a very important concept. Better approach, I think, is going through these positive and negative visualizations where you can actually imagine, right, kind of have a mental picture that says, okay, we're approaching NVIDIA earnings. If you're bullish, you think NVIDIA is going to hit a home run, and we're back at 460, right, in the next couple of weeks. Okay, that's scenario number one. Scenario number two, NVIDIA misses the expectations, right? Expectations are running very high, and we are back at 430, right? Or we break through the 430. Both scenarios are possible. I guess we'll find out, shortly, but they are reporting after the close. So instead of investing $2,000 in NVIDIA, right, which could move 20%, right, I propose you look at the stop losses, right, target gain and stop losses. So for spiders, again, one scenario, we're back at 460 after NVIDIA earnings and Jackson Hole, right? That's scenario number one. Scenario number two, we at least revisit last week lows, or maybe, or break them, right? That's also possible, right? I think both are extreme, right? Right now we're trading between 50-day moving average, right? Between this line and this line. So trading is all about probabilities, right? Probabilities, 67% of the time between now and the next week or two, we're going to trade in the range. We're going to be 430, 445, right? Purely statistically, right? If there's a positive news, then we could break out, and this would probably be 2 standard deviation for in the next week, let's say, right? So 17% of the time we'll get here, and 17% of the time there will be some kind of negative catalyst, right? Maybe interest rates will break out October highs, maybe dollar breaks, through the current overhead resistance, and then 17% of the time will drop to 432, right? So trading is about statistical analysis, right? You have certain probabilities where the stock is going to trade. Most of the time it's 1 standard deviation, but there's positive catalysts or negative catalysts that nobody expects. Then the stock moves beyond that expectation. So for risk analysis, if you think NVIDIA is going to hit a home run, I think the line in the sand is this lower Bollinger Band. It's last week low. It's August low. It's very important line. Next level of support would be around 420, 415, right? These lines. So this is your support number one. This is your support number two, right? And so the good news is that you don't really have to have a strong opinion. You can just say, well, market is in trouble if we drop below 430, right? So I don't want to have too many bullish position. And that's your stop loss. So if you buy in the market at 440, your stop loss below 430, so that's 10 points, right? If you're entering position now, I would say 10 points is your stop loss. 10 points is your stop loss, and what's the size, right? If you have a $10,000 account, I propose not to risk more than 2.5% of account value, right? So you're not buying 2,000 shares, you're not $2,000 worth of spiders, you're not buying, 100 shares, you risk 2.5%. So on a $10,000 account, right, it's $250. On $20,000 account, it's $500. And on the $5,000 account, it's $150, $125. So that's, I think, from trading perspective, that's the most important skill to acquire, right? Kind of rewire yourself. Always think about positive scenario, negative scenario, document it in a journal, right? You document these trades, you grade yourself. And as long as you don't risk more than $250 per trade, there's no wrong or right, right? You could be bullish on NVIDIA, you could be bearish, you could be bullish on Jackson Hole Symposium, you could be bearish, you could be neutral. That all of these are possible outcomes, and nobody knows those true. But it's just a matter of having an opinion, your opinion, or you use my opinion, and then you're in or somebody else's opinion, and you invest money based on that opinion. But the risk should always be, because that's what's within your control. Within your control is the risk, right? It breaks below 430, I'm out, right? That's within your control. If it breaks below 430, you invest on the 10 shares, that's what, 25, on 10 points, it's 25 shares, right? So 10 points is a stop loss. So into $250, that means I can invest 25 shares. And then if it drops to 430, because I was bullish on NVIDIA didn't deliver good earnings, we're below 430, day 1, day 2, I'm out. And then, but if you decide to stay, right, and you say, well, for sure, 415 will hold, but what if it do drop to 415 and then 25 shares? Well, now you're down $500. And that would be, what I would say, you did not follow your process, right? You need to acknowledge that and at least grade yourself C and D, right? Because, I mean, sometimes we can drop to 415 and then rally, right? Or we can drop to 415 and then continue to sell off, right? It just depends on the news and the catalyst. So that's the most important skill, and I encourage you to always go through this process. Meanwhile, what's driving the market? Some of the earnings, right? ADI announced earnings. Again, semiconductors outside of AI, right, like NVIDIA or Marvell are still, or Broadcom, right? You have chips that participate in AI. They are extremely strong, right? Broadcom, NVIDIA. And then you have, Texas Instruments and, ADI, kind of manufacturing, car industry, and they're underperforming. And then Peloton, again, we talked about volatile stocks, don't trade it, they can move 30%. Peloton is down 30%. You have Foot Locker down 30%. Macy's, I think we're down, 20% yesterday or something? Right, big drop in Macy's and X30 in general, right? That's been the theme for the past couple of quarters, that yes, people traveling, they're spending money on services, but retail, they're not, right? So you have big drop in retail sector, big drop in regional banks on, continuing downgrades, right? And KRE, I think, also broke through its uptrend, right? So we're broke through this uptrend line, and KRE has been underperforming. So today, semiconductors slightly lower, QQQ's 30 basis points higher, Spider's 30 basis higher. It's all about NVIDIA, right? I think it made all-time highs, right? Marginal all-time highs, it pulled back, it's slightly up. It's sitting at 50-day moving average, right? It has this 45-degree angle move. So it's probably not going to stay at these levels, right? Either it's going to break out to 480 and move 10% up, right? 520 or something, or 540, 20% up. Or it's going to, either probably 10% down. If it's double, then they'll probably, hit 400, 412. And if they get striked out, maybe 30, 360, 20%, right? 360, 380. So it could be volatile, right? I think implied volatility last time I heard was like 11 or 12% move in one direction or not. So one standard deviation would be probably 11, 12% move. Two standard deviation would be 20% move to the upside or to the downside. But it could stay the same. It's possible. There's just so many expectations. I assume it's not going to just move 1%, like calls 2%. That's it. All right. Any questions? Meanwhile, mega cap technology stocks continue to grind higher. If Google up 1.5%, Netflix up 2%. outperforming. Everybody talks about interest rates, right? 10-year yield breaking out. It has pulled back. So, but again, as long as it's above 4%, right? 10-year yield, as long as it's above 4%, there's always the risk of overshooting to the upside, right? And some people already put 4.5%. Some people said 5%. You know, that is the risk to this market, right? If all of a sudden after Jackson Hole, 10 years at 5, market is going to break through the 430 level, right? And dollar also kind of grinding higher, was just touched 104 this morning. So again, stronger dollar. Touched 104. It's a little bit overbought, pulling back, but you do have basically tests in June highs, very close to June highs. A large move in silver. So silver rallies, right? I guess an anticipation that there will be some kind of negative surprise, right? But silver and gold miners have been oversold. They're outperforming, right? And consumer staples trying to find the buyer. Okay, and oil also in the news continues to deteriorate, right? Continues to deteriorate. So it's not going to 90 like everybody anticipated. It's actually going back to 200-day moving average on slower demand, oversupply from non-OPEC countries, and crude oil pulling back. KRE continues to deteriorate as well. All right, any questions? All right, so KRE, I do have 2 shares. Let's see, so I'm trying probably before. Okay, so I'm gonna trim one position. It's getting close. Let's see, 255. Okay. Okay, so I'm going to leave it at 2. Okay, so KRE, right? I've been short banks and regional banks for quite some time. So trying to exit half of the position at 260, half the position at 440 on KRE. It's getting oversold level, so at least half of the position I want to close before Jackson Hole, because any positive news on KRE will rebound, and it is approaching 50% retracement and strong support, right? It's basically almost to the penny. First reaction to the Silicon Valley Bank bankruptcy. So it's getting close. So I want to, before close it. All right. Let's see. So that's KRE. Let's review the other positions. Well, let's see what else is. Okay, so 10-year yield is pulling back. Treasury continues to go higher. Dollar continues to go slightly higher. And high yield is higher, QQQ is higher, SPY is higher. So I mean, it's kind of, it doesn't make a lot of sense, right? But people are basically positioning for NVIDIA earnings and Jackson Hole Symposium, right? But dollar should not continue going higher, and spiders continue going higher. Spiders short-term overhead resistance, we talked about it. Yesterday's high around 441 or 43 level, right? That's kind of the overhead resistance. All right, any questions? So let's see, watch list. So we have home builders up 0.5%, China rebounding, it's extremely oversold. Energy is rolling over, so I would trim energy position. TLT is higher, going to Jackson Hole. I don't think there's any other. And looks like, yeah, Google and Netflix continue to outperform. And Google is approaching 52-week high. All right, so let's see. Let's see if we're going to trim Google to 60. Let's see, 360. See if we can close Google for 360. Or 350. Let's do 350. 20%, 350. All right, so I'm going to try to close Google. Team chat. It's getting overbought, right? It's getting, I don't think it's going to, it could break, right? If NVIDIA hits a home run, then obviously Google is going to continue going higher. But, I would probably trim. If you have more than one contract, I would trim. Otherwise, I would leave it that way. Any questions on Google? John, welcome back. Fred Fausler, good morning. That's the standard deviation, one standard move in the middle. Yes. So one standard deviation, right? You can find these tools under research. Right, so seasonality, right? Everybody talks about seasonality. It's all over the news. So everybody talks about that right now, very high correlation to this seasonality, right? And if that's the case, then yes, end of August, that's probably where the first wave is down around 430, right? Then you have a rebound the first 2 weeks, bulls step in it, maybe NVIDIA earnings, right? Bulls are stepping in till middle of September, then next leg down, right? That's where we break 430 and 420, 400. Right, so that's, at least right now, it's 84% correlation, and everybody talks about that. But again, same argument didn't really work that well in June, right? I thought June we're going to have a pullback, and instead we had a pretty significant rally in June and July. So seasonality, unless there is an event, right? In June there was an event, right? NVIDIA earnings, and that correlation got broken, right? So here it could be the same thing, right? If there's a negative or positive catalyst, then this correlation will be broken. So in terms of standard deviation, right? So the other tool is the probability calculator, right? You can enter any, basically says in the next 50 days, right? This is 50 days, right? In the next 50 days, based on historical volatility, let's assume volatility is still trading somewhere between 15 and 24. Expect that the market can reach 400, right? 410. On the downside, on an upside, 472. I think there has been enough damage that market is not going to reach 472, right? It could revisit the highs, 460, right? Or 455. Yeah. So that's one standard deviation, right? Two standard deviation, it's 377 or 503, based on the volatility, right? Next 50 days as we approach in October. So I think the risk is to the downside. If the market is going to be at 410 by the next months or so, or months and a half, nobody should be surprised, right? If it breaks below that, that's 2 standard deviation, and there is some kind of negative catalyst. How do you determine? So, John, here it's a standard deviation. You can put an Excel spreadsheet, right? You take 50 days, prices, and then you apply standard deviation formula, and you can find out what the formula is. But the most important is the deviation. So this basically says Google at 433 right now, based on historical volatility, it's way over. It's getting to overextended levels, right? And when it's at 115, it's also getting to extended because it's 2 standard deviation historical. Desi, welcome back. So TLT. I mean, I've been running TLT, just like probably 9 out of 10 people. This was the trade in December, right? Right now, I don't have any strong conviction that TLT will hold, right? In theory, it's oversold, right? It's sitting at the October lows. This was when the market reached the lows. It's, if you look at monthly chart, right? If you look at the monthly chart, on 10-year yield, right? Last time, we were higher was back during financial crisis of 2008. So, we're talking about 20 years, right? 15 years worth of, so extremely overbought level, right? Extremely overbought level. The U.S. debt, the sovereign debt is unsustainable at these levels, right? We just don't know how long, right? Kind of Warren Buffett saying that market can stay irrational longer than you can stay liquid. So the question is, you want to make sure you stay solvent longer than market can stay irrational, right? I don't think these rates are completely irrational because I do like this, not that I like or I don't like, but there is an argument, right, from a lot of bond vigilantes that the new norm of inflation is not going to be we're never going to get to 2% in the near future. Now higher for longer, right? Unemployment is still low. Everybody's traveling. Everybody has a job. Everybody's spending crazy money on airline tickets and on Gucci bags and I don't know what else. And the new norm is 3%. That means that the 10-year yield should be 5% or 6%, right? I mean, with all the $1 trillion printed, can that be a service? Probably not. But then the timing, right? When will the rates pull back? I thought it's going to be the first 6 months. Obviously, it didn't happen. Obviously, now I think it's the first 6 months, the second 6 months. But still, you could have overreaction, right? And a lot of research that I'm following already saying it could be 4.5%, it could be 5%. Personally, I did have a large position in TLT, so I trimmed it in my personal account. I'm planning to basically wait for Jackson Hole, right? I don't really, at this point, I'm down more than 2.5%. So when you're down more than 2.5%, you don't really have luxury of waiting. So if Jackson Hole announced and we are breaking through these levels, day 1, day 2, we're at 435, 445, 450, I'm out, right? Because it can go to 5. It can go to 5.5. Nobody knows, right? But unfortunately, right now liquidity is low. Everybody's on vacation, right? And I don't want to wait till October to see the rates at 5%, right? Can this happen? Yes. From technical perspective, 70% of the time this level holds, and then we reverse down, right? So I still think that we will reverse. Looks like rates are reversing for now, right? But again, the line in the sand is this level, right? 4.08. As long as we stay above 4.08, there is a risk that rates are going to 4.5 or 5%. If they drop below 4.08, I think coast is clear, right? We're probably not going to continue going higher, but a lot of hedge funds, a lot of people are betting that it's going to go to 4.5 and 5%. Going back to game theory, I don't want to bet against majority, right? So I mean, it is a negative surprise. I thought by this time, especially when inflation is continued to roll over and go down, but this resurgence of inflation coming back and staying for longer, I guess pushing the rates to extreme. Thank you, Desi. Is NVIDIA tied to all QQQ? I mean, NVIDIA right now is tied to the entire market, right? NVIDIA, the only reason the market, right? NVIDIA announced earnings on May 25, right? May 25th. So the only reasons, I was wrong, right, on May 25th, right, that we're going to break, right? Bob and I were going back and forth. I said 420 core scenario, 430, best case scenario, and we're at 460, right? So the new information was NVIDIA earnings, right? Because the catalyst is that generative AI will change our life, right? It's like cable or air conditioning, right? Or electricity in, 18th, industrial revolution. So, and so far, all the other stocks that were following the AI argument, they rolled over, right? There is no evidence, at least short term, that there could be a substantial boost in the revenue from these AI orders. The only stocks is NVIDIA, right? Because all these startups, now money are pouring into, AI. You have a model, you have an idea, okay, you're getting millions of dollars from venture capital. What do you do with these $1 million? You buy NVIDIA chips, right? You buy NVIDIA chips. So NVIDIA is not only tied to QQQ, it's tied to the entire market, right? Just like NVIDIA pushed the entire market, from 430 to 460, it can push it back to, the entire market back to either all-time high or break below 430. So that's the risk. And from everything I heard and every research, I think it's a flip of a coin, right? Because their multiple, right? Their multiple is extremely high. So more than half of the people have to ignore that multiple. The only way they can ignore it, if they're going to guide higher, they're going to say whatever we said in May, now it's a lot more, right? A lot better than it was in May in terms of future guidance on the revenue. If they say no, we're kind of business as usual, or if they say any supply chain issues or any issues with Chinese government or TSM, you will have a large move, right? You will have this 20% move. Could you clarify about standard deviation move settings, the price range in the chart? Yeah, so these are Bollinger Bands, historical deviation. You can look at here. See, it says BBB, Bollinger Bands, and 2 standard deviation. Right, so when NVIDIA is at blue line, that means based on 50 days historical price action, we are 2 standard deviation move at Bollinger Band, overbought. Does it mean we revert back? If there is no news, yes. If there is no news, more often than not, you do revert back to 50-day moving average. But if there is some kind of positive catalyst like earnings or some kind of an announcement, then it doesn't matter, right? What 2 standard, you can move 3 standard. You can move 4 standard deviation moves. So that's kind of what the situation we're in. Well, you have to be careful just looking at standard deviation. This could be just one of your questions. So, John, let me know if I answer your question. Sorry, there's a lot of questions, so I'm kind of falling behind. 5-year I will follow, yet TLT is rising. So TLT is tied mostly to 10-year and 30-year. And you have a big drop in 10-year, big drop in 30. TLT is up 1.5%. Right, TLT is up 1.5%. Desi, thank you. John, thank you. Fred, thank you. John, thank you. Already did. Thanks. Okay, great. Thank you. What else? Okay, let's look at the other positions. Sorry, we're falling a little bit behind. Okay, Clorox, CLX. I was bored yesterday. I was listening to Jim Cramer. I know a lot of people don't like Jim Cramer. I think he's a fun guy to listen to. Consumer staples are oversold, right? It looks like it's finding support. It's the same argument, right? If you down 2.5%, we have these two events, and Clorox and consumer staples continue to sell off, right? I mean, we are sitting at March lows, right? We're sitting at this gap, earnings gaps back from February. Anything negative catalyst is going to go down. But if just technical analysis, 200-day moving average, 50-day moving average, very strong. From technical perspective, stock is extremely oversold, and more often than not, 70% of the time it bounces back and reclaims, at least trying to close the gap. So CLX, I have luxury of waiting because it's a stock and I'm not down 2.5%. I do put half of my order to make sure that if I am at this level, I'm not down 2.5%. If you're down 2.5%, I would exit out. It's very bearish. Below 50, below 200. It's not just CLX, Procter & Gamble. All consumer staples, right? People are just dropping consumer staples, right? Because of interest rates, because of the dollar. There's a lot of headwind, especially stronger dollar, right? So whether it's Procter & Gamble, Pepsi, I think he mentioned, right? Pepsi, Mondelez, they're all kind of falling off the cliff, right? And even, stock like Walmart, right? There's nothing wrong with Walmart earnings, but, you have this large move to the downside. So I think Clorox will bounce, but, you have to follow the rules. CVS, so I'm still long Clorox, I'm still long CVS. Looks like they're both going through the bottom building process, but the same rules. If down 2.5% or more, I would exit. If you're still, I would wait to see if this long-term support hold. If they do, great. If they don't, then you can exit. I do have XLP option, right? With options, well, a majority of the premium is gone, so unfortunately I can't really do repair, right? It was kind of a precipitous sell-off. So at this point, I allocated, 1.5% of my portfolio. I'm down. Most of the premium is gone from these options. September, you could have a catalyst where you can just like elevator down, you can have elevator up, right? I think it's what, 70, 75. 75, 80. So, I probably not going to get to 70 very quickly to 75. So most likely it's a losing trade. But, I could recover at least some of that premium. So for now, I'm just waiting on XLP options. And that's argument for option versus stocks. Options, you have to be correct on the time. So then I encourage you again, when you buy an XLP option, 75 call, you just multiply it by 100, you're investing $7,500. I'm not risking $7,500. I'm only risking, $2, right? But that would be my thought process, right? You only buy one contract, $200. Okay, I was incorrect. You're down less than 2.5%. You move on to the next trade, right? But when you choose between one or two contracts, you always multiply by 100. And even though I'm only risking $200, but my exposure on XLP is $7,500 versus stock, underlying stock. So these are some of my bullish positions. Google, I'm trying to exit, right? Google is approaching overhead resistance. It's probably going to move. I would, before NVIDIA, if you did two contracts, I would close at least one, right? If you did one contract, I'm trying to get out. We'll see if I'm able to get out by end of the day. I think we're getting close, but let me see. Google is, I mean, it's not at 350, but it's getting there. So these are bullish position: Clorox, consumer staples, healthcare, Google, and Eli Lilly. Right, Eli Lilly continues to grind higher. And these kind of defensive, right, defensive plays, right, with the idea that the risk is to the downside. Usually people go to consumer staples, healthcare, and well, and Google, because it's the bull trend is intact for now. KRE, I'm trying to, this is bearish position, I'm trying to trim one contract. It got closed, now pull back, but trying to trim KRE position. This is bearish 45-35 put spread. I'm getting close to my exit prices. September QQQ will probably expire worthless, but October still provides me the hedge. So 360, just like I did 290, 270 back in March, because I was concerned that market is going to pull back. First half of the year, now I'm concerned that it's going to continue to pull back second half of the year, so 360, 340. And that should hedge me if NVIDIA does get bad earnings, then this will provide most of the hedge. If you're uncomfortable trading options, I still have SH. Right? I think the top is set for the next few months. So more risk to the downside. So buying SH. Still have TLT. Right? We talked about TLT. And XLF, right? Banks are also, major banks are also in the news. Right? They continue to deteriorate. They're oversold, below 50, below 200. A little bit overdone, probably could bounce, especially if the rates stabilize, right? But that would be the setup. Silver is going higher, right? I mean, why? I mean, one reason, extremely oversold, right? We talked about XLP, we talked about silver. It's extremely overdone, right? So at least the precious metals, people think that it's extremely overdone and that the dollar is going to pull back, right? The dollar is overdone, and at least short term, it needs to pull back. That's why silver is rallying, right? And that interest rates will pull back. So people betting that interest rates will drop and the dollar will drop and the silver will rally. So people are positioning for that event. And it's a little bit overdone, so maybe even makes sense to trim. Okay, thank you. So that's silver. All right, any questions? All right, Discord guys, thank you very much. I'm gonna sign out. All right, so that's silver, TLT, XLF, we talked about XLF, and we talked about XLP. So these are all the positions I have. So going into the event, again, this is the time to rebalance your portfolio. I think core scenario, we basically follow seasonality, right? Expect that we are approaching the bottom, that the 430 will hold. We're not going to have any negative surprises, big negative surprise, right? I assume we're not going to have, that NVIDIA is not going to get striked out, and that Powell is not going to say that, Earth is falling apart, right? So assume, making these two assumptions, we're probably going to find the bottom, right, this week or next. Then rally first half of September, pull back, probably break through the 430, right, get close to 420, 410, and then we still have Christmas rally. Still have a Christmas rally. Everybody's employed. GDP got revised to 5%, which in the third quarter, this is, a huge surprise. So, unless we have some structural issues in credit, that seasonality should hold. All right, any other questions? Ian noticed Apple and Microsoft Office performing the past couple of days. So today, Netflix, Google, and Apple are outperforming. Right? They're outperforming. Or PDCO is up. I forgot about PDCO. Clorox is up. Yay. So I do have PDCO. Did I miss it? Healthcare. Why don't I see? Oh yeah, I do. So PDCO, it's rebounding. I can take out Macy's. ADI closing the gap, so that's good. Zoom is up. So you do have a bounce. Right, big bounce in Google, Netflix, and other stuff. So. Any questions? Sorry, 1 second. Let me know if you guys have any questions. All right, sorry about that. All right. Any questions? That SH, so yeah, I mean, all of these are hedges, right? SH, question is SH or QQQ bear spread. These are all obviously good hedges if you have, if you're concerned about that the market pullback is going to continue. Yeah, so I do have QQQ bear spread in October, so I'm holding that because I think at least market is prone for negative surprise, as we talked about. So I'm going to hold on to 360, 340 put spread. I would say right now, probably, if seasonality is correct, and this is what's going to happen, right? Maybe a little bit lower, maybe a little bit higher. Sideways action, market neutral. Condors, iron condors, spreads, butterflies, cover calls. These are the strategies you want to utilize. If you don't trade options, you have 2 bullish positions, 2 bearish. Maybe you have long Google, but you short, you buy SH, right? Maybe you buy LA Lilly, and you buy, well, TLT hasn't been really good, but you buy, what else should benefit from the market sell-off? Well, silver, right? You can buy silver. Fred, EQT, I haven't. Yeah, it's been there for a while. I don't have a really strong opinion. That has been in strong uptrend. It's still intact. I think this is one of, if you want to play energy, oil or gas, this is the place to be, right? Looks like bull trend is still intact, but the gas prices and crude oil, I'm in the bearish camp. I don't know how much it has exposure to gas versus, I always think about gas and oil same, but they're not. But this is not a good price pattern, right? A, B, C, approaching 250-day moving average, broke the trend. Structurally, crude oil is in trouble, right? I don't have a natural gas. Do I have natural gas futures? I don't know what the symbol is. I usually don't trade them. Natural gas futures. Here we go. I don't think that's the right one. Natural gas, this is Mexico. NG. No, that's Russia. NYMEX. That's right. Yeah. I mean, this also doesn't look very healthy, right? Let's assume that this is the right futures. I think it is, right? I mean, it's pretty bearish price pattern. So EQT definitely performing much better than the crude and oil prices. Still intact, but you can see a big gap today. And I would just watch this uptrend. Right, I would watch that line. As long as it's above this line, then it's a buy. If it breaks below 50-day moving average, EQT is in trouble. Bill, no, sorry about the phone call. Fred, UNG gas, right? Well, I mean, UNG and crude, you have to be careful with UNG and futures, right? It's not one-to-one. You can see it's not one-to-one. And UNG is actually, it's been consolidating here for many, many months. All these ETFs that have options and futures, it's just big disappointment, right? Like, I prefer not to trade them. If you really want the exposure, find either stock like EQT or trade the futures, right? Open futures account. But VXX, UNG, USO, I mean, they don't move one-to-one. All right, 9:10. Any other questions? What is happening going? So people are optimistic, right? Interest rates are down. Dollar actually, reversing, right? It broke through July highs and now reversing down. QQQ is up 1%. Spiders at the same level we were yesterday, right? Retraced all of the losses from yesterday, life is good. Okay, so people are positioning for a positive surprise. It's good. Any questions? The 912. Larissa alone. Aviva, Bob, Carol, Chet, David, Ed, Faust, Fred, Khaijo, Patrick, Peter, Raymond, Ted, Thomas, Tori, Mark, Victor, Bill. Any questions? What else? In terms of earnings, so Zax, I mean not Zax, the NVIDIA. After the close, we have NVIDIA, we have NTAP, right? So semiconductors, Splunk, all of these are tech companies announcing after the close. Autodesk. Those are opportunities, but again, all of these, NVIDIA, NTAP, and Splunk, you have to be ready for 20–30% moves. So you have to look at very carefully the implied volatility, historical volatility, and even if implied volatility justifies the risk, you still want to downsize the trade, because I think, especially NVIDIA is going to move the market. And then tomorrow before market, Dollar Tree, not a big deal. NetEase, GPS. Okay, so those are the earnings. In terms of sectors, let's see. We have a broad-based participation. So home builders, looks like they're, they broke the 50-day moving average, bouncing back, so also pretty bearish pattern, but you have participation in home builders, China, REITs, small caps underperforming, healthcare underperforming, transportation underperforming. How's XLI? XLI is underperforming. So it's not a broad-based rally, mainly driven by mega cap technology stocks, mega cap technology like Apple and Netflix, Google. And Google looks like we are getting close to exit 350. To hold the spread. No, Google is actually, ideally I want to close out today, right? Because obviously Google is at all-time high, not all-time, recent high, right? Year-to-date high. So it's at year-to-date high. It's a bet on NVIDIA earnings, so it's a binary event, right? If NVIDIA hits a home run, then Google is going to continue going higher. If it doesn't, then it's going to pull back. I think the risk is to the downside. If you have more than one contract, I would trim. Right, at least close half of the contracts after this rally. If you only have one contract, I'm actually trying to exit out. It's a short trade. I opened it Monday. It's Wednesday, and it's up 20%. It's actually getting close. I put it for 350. Last sale was 345, so it's within 5 cents. The spread is within 5 cents. Chat, who estimates earnings? There are analysts, right? There are research analysts that specialize in certain stocks. They analyze their statements, they estimate their earnings. Bob, Tesla is pulling back. Yeah, I think there is news from Germany that they're underperforming, right? So Tesla is already pulling back. Yeah. And there is some news that Europe production is down. Tom, thank you. All right, any other questions? All right, it's 9:18. So yeah, I think I would prepare for best and worst case in NVIDIA, right? I mean, one standard deviation move, I think it's 11%. Two standard deviation, it's 20%. So, it could be a $520 stock. It could be, $410 stock. And both outcomes will push the entire market up and down or down. I think right now the best scenario is you have 4 positions, especially if you're new to trading or new to our services, have 2 bullish, 2 bearish positions. I mean, I have more because we have different services. I have Yellow Tunnel, I have Tradespoon, so I have to give examples. So, I have stock position, option position. So, if you're an experienced trader or you're an educator, I guess you can have more than 4 positions, right? But if you just started, I would say 4 positions, 2 bullish, 2 bearish, right? Maybe you're bullish on Google and you're bearish, using SH. Or you're bullish on Clorox and you're bearish on, PSQ or, QQQ put spread, something like that. All right, thank you. Thank you, Faust. Tom, thank you. Thank you very much, everybody, and we'll see you tomorrow. Thank you.